Hello folks, this is Larry Strzelecki from Assured Concepts Group with your June 2015 Educational Economic Update. In this month's video, I'm going to talk about some of the major economic headlines from last month and give you some insight into what they might mean for markets and for you as an investor. As you're aware, Greece dominated headlines last month as negotiations struggled to reach a deal between the indebted country and its European creditors. On the U.S. side, investors also dealt with the Federal Reserve meeting as well as better than expected May jobs report. Now in June, Greece definitely took center stage as negotiations over bailout money failed, forcing Greek lenders to push the issue to the voters in a referendum. Greek banks were shut down to prevent a run, also limiting ATM withdrawals to prevent panicking Greeks from withdrawing all of their money. Now in the weeks ahead, we'll be watching for more news from Europe as the fallout from the Greek crisis starts to land. Though the situation may be a tragedy for Greeks, we don't expect to see significant issues in the United States and other parts of Europe, and there are several reasons. First, Greece is not a big contributor to the global economy. Secondly, Greece has been in various stages of crisis for years now. At this point, economists, investors, and government leaders are as prepared as possible for the crisis. Though we cannot predict the future, we believe the effects of the Greek situation on U.S. markets will be limited. We have seen a short-term pullback as investors adjust to the uncertainty, but we can hope that attention will return to domestic fundamentals. The Federal Reserve Open Market Committee met in mid-June to discuss the current state of the economy. Though they did not raise interest rates, Fed economists reiterated that their commitment to raising rates was a wait-and-see approach. We don't know yet what the Fed will begin raising interest rates, but a number of Wall Street experts are betting on a third quarter rate hike this year. Are rate expectations already baked into the stock and bond markets? It's hard to know for certain, but the Fed has been doing a good job of laying the groundwork for future rate moves, so we can hope that markets will not overreact when interest rates start to rise. Domestically, the economic picture is looking brighter. The economy created 280,000 new jobs in May, beating expectations. Though the unemployment rate ticked higher to 5.5%, it came as a result of more people looking for jobs, which is a good sign about the labor market. The final number on the first quarter economic growth showed that though the economy contracted in the first quarter, it only fell by 0.2%. It's better than expected and hopefully paves the way for a stronger second quarter. So far, estimates on the second quarter range from about 2% to over 3.5%, and most economists are looking for about 2% for the entire year. Looking ahead, investors will be taking a close look at earnings reports from the second quarter to see how U.S. companies did in the past 3 months. We'll also be delving into economic reports from the first half of the year. All told, we have got a lot of information coming at us in the next few weeks. As always, we're keeping a close eye on the markets and will update you as necessary. That's it for the June Educational Economic Update. If you have any questions or concerns about what I've discussed, please give our office a call at 847-426-1077. Once again, this is Larry Strzelecki with Assured Concepts Group signing off for the month of June. If you have any questions about today's presentation, feel free to give me a call on my cell phone, 847-431-0144. Have a great July. Thank you.